Have you ever wondered, how are Bursa Malaysia's marketplace being monitored? Would you like to know how the marketplace is maintained orderly and fair? Welcome to Bursa Malaysia. We are the frontline regulator of the equity and derivatives markets. So, what does this mean for you? Through Bursa Malaysia regulation, we ensure the markets you invest in are orderly and fair, so that you have timely, accurate, and complete information to make informed investment decisions, are able to trade in a fair and efficient environment, have confidence in your brokers to provide secure and trusted services to you. So, how do we protect the marketplace? We have multidisciplinary teams in Bursa Malaysia regulation that focus on specific areas while collaborating with each other to provide a comprehensive network of safeguards for investor protection. We also work closely with other regulators and law enforcement agencies. Real-time surveillance of the market. We have a market surveillance team that acts as your market police. They monitor the stock market against irregular trading activities in day-to-day trading. This team uses an automated surveillance system to monitor trading in the equity and derivatives markets in real time. Should irregular trading activities be detected, this team of specialized analysts will fact-check and engage the brokers involved for their immediate action. Supervision of intermediaries. As safeguarding the integrity of the marketplace is paramount to us, our intermediary supervision team secures the protection of your trading and deposits through consistent broker monitoring and inspection. Disclosure. Continuing listing obligations and gatekeeping of listed companies or products. To be ASEAN's leading, sustainable, and globally connected marketplace, Bursa Malaysia places high emphasis on the quality of our listed companies. This begins from the approving of new listings on the exchange, through to ensuring that listed companies remain of quality through governance and compliance, as it is imperative for investors to be well informed in the fast-paced financial world. Bursa Malaysia regulations listing and corporate surveillance teams monitor companies' corporate announcements so that they are disseminated to you in a timely and accurate manner. Enforcement action is taken should there be any failure to do so, or should there be any material inaccuracies to the announcements made. As we are also a venue for listed companies' secondary fundraising, our relevant departments work together to ensure investors' funds are always used as mandated. We have a dedicated team of finance experts to examine corporate disclosures, including financial reports, so that they are accurate and timely that you can rely on. Within Bursa Malaysia regulation, we have subject matter experts that look at the various international sustainability reporting frameworks that are constantly evolving to ensure that our disclosure requirements are appropriately benchmarked. This ultimately drives the desired improvements in our PLC sustainability disclosures as well as practices. Taking enforcement action. So what happens when the persons are regulated by us? Be they brokers, advisors, listed companies, directors, or their representatives, breach our rules. Appropriate action will be taken against them. The types of action taken would depend on the severity of the breach. Suspected breaches will be investigated, and enforcement actions will be taken if the breach is proven. Our enforcement proceedings and actions are consistent and fair as cases are discussed in a robust manner through our regulatory committees, comprising independent individuals with relevant experience and backgrounds. Policy and rulemaking. Bursa regulation is the guardian to the 10 rulebooks of the securities and derivatives markets. Rules drawn up by the regulatory policy and advisory team are always outcome-focused. Industry or public consultations with the relevant key stakeholders will be undertaken, alongside rigorous benchmarking processes to ensure the rules are relevant, effective, fit for purpose, and on par with international standards. Each multidisciplinary team in Bursa Malaysia regulation is intertwined and interact proactively to ensure high standards in market integrity.
All right, so hi everyone. Welcome to today's webinar brought to you by Bursa Malaysia and managed by LifeChamp. My name is Carmen and I will be your moderator for this session. Our session title today is How to Trade Efficiently Using Candlestick Patterns and Formation. And of course, before we move on, allow me to do a short disclaimer. So please be reminded that whatever that is shared in this session is merely for educational purpose. By no means we are providing you any advice to buy or sell any securities. Yeah. So you are 100% liable if you make any investment decision. Okay, so today we are very honored to invite Mr. Raisi Chin, the founder and chief trainer, Sharewell Consulting, to share with you exactly how to apply the practical strategies for utilizing candlesticks patterns to improve your trading decision and achieve better results. A little bit about his background. YC specializes in technical analysis for trading. He focused more on share movement, price volume analysis, and candlestick pattern to gauge buying interest, selling pressure, and key support or resistance levels. So with a finance and accounting background, YC shift from fundamental to technical analysis, developing his own strategy. So with that being said, please welcome Mr. YC to the floor. Yeah, hi YC.
Hello, thank you, Carmen. Morning. Okay, so I'll be sharing my slide. Okay, so everyone can see,
Yep, we can see your slides.
okay, so understand that recently the market is very bad. So first of all, thank you everyone for showing up to this webinar, and I hope you all can learn something today. Okay, so our title today is how to trade efficiently using candlestick patterns and formation. Okay, so first of all, there's a disclaimer. Everything that we share today is just for educational purpose, for learning purpose. There's no any buy or sell call. So basically, it's like we will be sharing some of our own techniques, what we practically do, and we will share also some of the case study that we really trade traded. Okay, so no matter how, there's no any buy or sell call on the case study that we will be sharing. Okay, so this my background, so common already shared. Basically, it's like I feel that in Bursa trading, in Malaysia trading, so um we should combine the TA together, technical analysis together with the fundamental analysis. Uh, because if we purely based on fundamental analysis, like from the uh, recent market, we can see that like those fundamentally good counter, fundamentally strong counter, like those technology counter, okay, all started to drop sharply. So if we combine the technical analysis, we can at least earlier can see the change of the trend. So avoid us from the huge drop on those like technology counter, on those like hot counters, like those AI team counters. Okay. This is our flow today. So I'll be sharing for the PVA first, which is a price volume analysis first. Then we will learn about the selling pressure and buying force. Then we will learn about the useful candlestick pattern. Okay, kinesthetic pattern and kinesthetic formation a little bit different. So we will be covering today. Then we will be sharing some of the case studies, and also I'll be sharing the ETS, which is the Bursa Academy Stimulator. Okay, to let all of us know that how we as a trader, like every day, how we monitor the market, how we what is the thing that we will see, such as the gainer, loser, such as the top volume list, okay, everything that we will be seeing um, every day. Okay, so this is the flow today. We will be starting with the price volume analysis, which is the PVA. Okay, so price volume analysis, the most important part is the price and the volume. So the volume basically means that the traded volume, okay, the traded volume of the stock, of the underlying, okay, of the counter itself. Okay. So basically volume means that people, how people, monitor it, like how they attract the markets focus. Okay. If this counter there's no volume, means that this is not active. Okay. If there's not active stock, we wouldn't much be focusing on it, because if there's no volume, even you able to buy in, it will be very difficult for you to sell out because there's no volume. And if uh if we able to notice, like in the past probably 2 weeks time, you can see that most of the counter, they started to have lesser buyer. Okay, the lesser buyer is not just as in the traded volume, as in even the queue. Okay, the people queuing there or queuing lower price. Okay, when the stock is being thrown down, then people want to catch. Okay, so you can see from the queue, it's like lesser people willing to queue for certain stocks. Okay, you can see the queue earlier probably is like, a few thousand lot queuing in a certain price. But now if you really monitor it, you can see those even hot counter, there's only few hundred lots per queue per price. Okay, it means that the buyer in the current market is drying out. Okay, the drying out not necessarily means that they are get trapped at a high price. Okay, it might because they, like most of the buyer, they are afraid. They are afraid of buying in current timing. Okay, so they don't want to buy. Okay, that's why it causing the buyer to dry out. That's why you can feel that, or in the current market is very soft. It's like you don't feel like, want to see the market that is not active. It's not like the market is very active. You can feel like, oh, this counter is going out, the counter is going out. Now it's like dead market. Okay, so it goes back to the volume part of it. Then the other one is the price. Okay, the price means that, okay, basically is the stock price. Okay, so basically we will see, for us, we prefer to see the opening price, okay, and also the closing price. Okay, these two prices means more to us. The opening price, we will see the TO. Okay, let's say before the market starts. Okay, market starts 9 o'clock, probably 8:58, 8:59. Then we will be monitoring the TO price, theoretical opening price of the stock that we will be monitoring. Okay, whether it gets up or it gets down, or it go flat. Okay, so we will be monitoring the opening price. And the other one is the closing price. Okay, the closing price also means a lot for us. And sometimes if certain counter during the day, it might up and down. Okay, it might up and down. But at the end of the day, once they flush out the contra player, okay, probably after 3 something, 4 something, okay, you can see, okay, there will be a sell down. Okay, because contra player, they don't want to hold. Okay, after those people can flush out, okay, they got washed out. Okay, then the price started to go stable again. Then in the end of the day, the closing price, somebody will close high. Okay, the somebody can be hot money, can be institution, or can be just PDT, IVT, those bank trader. Okay, some of the strong counter, they will close it higher. They close it higher means that, okay, they will eat up in a higher price to make a better candlestick chart. Okay, so basically this is what we will be seeing as a trader. Okay, so for the PVA, how are we able to apply in the trading? Usually we will see the breakout. Okay, we will see the breakout. Okay, if a breakout happens, it means that it breaks above the resistance zone. Okay, a real breakout comes with increased volume. The price go up, the volume, it has to go up as well. Okay, so price up, volume out, means that this breakout generates huge momentum. Okay, then for the retracement, then it should comes with reduced volume. Okay, it should comes with reduced volume. So the PVA basically we will apply on the breakout. A successful breakout, it breaks out with the increased volume. And when it retraces, it should above the breakout zone. It should maintain above the breakout zone, and it retrace with low volume. Okay, it retrace with low volume. So basically, this is the thing that we will be seeing through our real trading, our practical trading. Okay, so if a stock, let's say if it breaks out with lower volume, so for us, we will feel that, oh, this breakout probably is not as strong. Probably it's like the buyer is not enough, so it's just like sudden push out. So probably after a few days time, or probably after 1 week time, it probably will drop back below the breakout zone because the volume is little. The volume is too little to push above the breakout zone. Okay, there's no much buyer back then. Okay, and also the same goes to when it retraces with huge volume, means that a lot of people they want to sell. After the breakout, a lot of people they want to sell. So it retraces with huge volume. Okay, by right, if this counter is going smooth, it will retrace with low volume. If it retraces with huge volume, means that, oh, after the breakout happened, the price goes out. Then a lot of people they wanted to take profit, or people think that this price is considered a high price already. So they want to sell. It becomes it makes the volume become higher. So this type of retracement, even it retraces back to the breakout zone, we will be cautious. We wouldn't easily buy in, even though buy or retracement. We wouldn't easily buy in because the volume is we call it the sell down volume is too much. Okay. So secondly, we will be sharing about the selling pressure and also the buying force. The selling pressure is the supply. Okay, basically it's all about demand and supply in the market. Okay, so resistance is the supply. Supply is the selling pressure. Then the buying power is the demand. Okay, the demand is the support. The demand is the support. Why? Because when the stock price started to drop until a certain level, okay, this level, people think that it's cheap. People think that, okay, is a good formation. People think that good valuation. Okay, no matter what is the reason people think, but they think that they want to buy. Okay, the reason behind is another story. But the action they do is they want to buy. So the buying itself, the buying action itself will create the demand. So it will create the support. When the buyer is more than the seller, the price will stop dropping. Okay, that's where the zone is called the support zone. Okay, same goes to the resistance zone. Okay, when the stock price shoot out, okay, when the stock price shoot out to a certain level, people think that, okay, this is already enough. The price already shoot to a level that I think is high already. So I want to take profit. Okay, no matter it's like technical analysis, they feel already reach a TP zone, or they feel that this counter, the valuation is over already. Okay, so no matter what's the reasoning behind, the action is that they want to sell the share. They want to sell the share. This is the action. So the selling itself, the selling action itself will causing the supply of the counter of the share. Okay, so it creates the resistance. So everything is linked. Everything is linked. Resistance is the selling pressure, is the supply. The buying power is the demand, is the support. Okay, so usually how do we know, like, which part is the resistance, which part is the support? Basically, it's like we can draw. Okay, we can draw. Okay, you connect the high to high, there's the resistance zone. You connect the low to low, there's a support zone. Same goes to the horizontal one. Okay, basically from this picture, we are able to see quite clearly that if you're connecting the low to low, high to high, is the resistance and also the support. So we try to connect as much as possible. So the zone, the point will be more critical one because it touches most of the prices. Okay, so we can see from this, whenever a stock it breaks above the resistance will becomes the support. The resistance will become the support. Okay, so this is what we call RBS. resistance becomes support. That's why just now we mentioned about the breakout, right? The PVA, the price volume analysis, the breakout. Just now we mentioned about when the stop price breaks above the breakout zone, so it should maintain above the breakout zone. Why? Because the breakout zone, the resistance zone, is support. It is supposed to be a support. It's supposed to be a new support after the breakout happens. Okay, so if one day it breaks out with low volume, so it will be easier to drop back to the previous breakout zone. Okay, so it means that this one is not a valid breakout. So we wouldn't much trade it. We wouldn't much trade it. Okay, so from this picture, we know that okay, resistance and support, they are able to change depends on the different timing. Okay, RBS resistance becomes support. SBR, okay, support become resistance. Right? So basically it's like basically it's like, you know, it will keep switching. It will keep switching. So how do we able to identify? You connect most point as possible. Okay. So this is another one. So this one is the theoretical one. You can see everything you can see is nicely drawn. But this one is the actual one. So the actual one, most probably you will see sometimes a certain zone is not like perfectly touched. It can be, you know, some of the points it breaks below the line, or some of the point it breaks above the line. But no matter how, it's like you try to connect as much as possible for the most touch point. So you will be able to know that that is the resistance zone, high to high. That is the support zone, low to low. Okay. So this is the actual chart, actual stock chart that we will be seeing every day, because there's no like perfect plotting. So you have to find a zone. Okay, it's not like 100% every point, every time it will touch that. Sometimes it will break below a bit, it will break above a bit. So we just need to get an idea. That zone is the resistance zone, that zone is the support zone. Okay. So here comes the candlestick pattern. So for the candlestick pattern, if we learn from YouTube or we learn from books, we will be learning a lot of the patterns. Okay, when I first started, I also learned a lot of the patterns and many different names. Okay, you study the Chinese one, which is the, you know, Eastern one, Western one, different terms. Okay, different names, different patterns, a lot. Okay, there's a book, I think got 300 candlestick patterns, because not only the patterns are also include the formation. Okay, the formation, you know, the formation, the pattern is like one candlestick, two candlestick, three candlestick. That's called pattern. Formation it includes a period of time. A candlestick pattern form a period of time. That's called a candlestick formation. So there's a book, I think it's the Chinese one, include 300 so-called formation. We call it pattern or formation. So basically it's like, if even though we learn this much, but there is not 100% that all can be applied in the stock market. So we just select a few that we think is the important one, is the worth learning one. Okay, in these sessions. Okay, if in the future you all have time, you want to learn from YouTube, want to learn from those books, okay, feel free to go, because as many that as we learn, you're able to combine everything together. You know, okay, when this pattern happens, okay, it means something. When this pattern happens, it means another thing. If you read more enough, okay. So for this one, basically hammer, I think most of the people they learned before, but in the actual trading, this is one of the important one that I feel. Okay, so the hammer basically means there's a reversal pattern, but to notice that, okay, if the low point of the hammer is got broken already, means that the reversal is filled already. Okay, a lot of people they just have the first part of idea. They feel that, okay, when the hammer pattern appears, then the reversal pattern 100% it will happen. But for me, it's not the case. It's not the case. If you go and check in the Bursa, a lot of downtrend counter, right? When it form hammer, it will really rebound. it will really rebound. But the thing is that the rebound is a short period one, just few days, or just like, 5 to 10%. So it is enough for you to do the short-term trading. Okay, you buy, then second day, third day you sell. It's enough. But if you want to continue holding, you have to use the hammer low point as the support zone. Okay, but most of the people, they don't do the trading plan that correctly. Okay, they feel okay, when hammer happens, they buy, then they just keep holding. They think that it will reverse back to previous peak and even break above the previous peak. But the thing is that it might not be the case. The hammer happens in a downtrend counter, it might just be a short-term rebound. After it rebounded, then it start dropping back, and it might drop below the hammer zone. And until the zone, if you are still holding, then you have to cut loss already. If you are not taking profit and you continue holding below the hammer zone, then you have to cut loss. But the thing is that a lot of people, they don't like to cut loss. Okay, so in the end they will feel that, okay, the candlestick formation, the candlestick pattern is not true, it's fake one. They'll feel so. But the thing is that actually they don't know how to use it. They just learn the first part of it. They didn't really learn the second part of it, which is, okay, whenever the hammer happens, you have to use the hammer zone as the support zone, because the hammer means that at that day, people buying from the low point. It's like the stock start dropping. Okay, it opens, then it start dropping. But at the end of the day, somebody eats out. Okay, somebody close higher. That's why there's a long tail. Okay, long shadow. Okay, you call it a tail. Okay, basically it's like the tail. You have to make it as a support of that period of time. Then if the support cannot hold, then you have to go. You have to cut loss. You have to exit. Okay, but the thing is that a lot of people, they think that, okay, whenever hammer happens, it's like 100% it should go out. It will more or less, it will rebound a bit, more or less. Okay, but it's not like 100%. It will rebound until reversal to the uptrend. It's not necessarily the case. Okay, so the second thing is the bullish engulfing. Okay, this is another pattern I feel in Bursa you can apply it. You can, whenever you see this pattern, then you can start monitoring it, even though you don't like necessarily need to, on a period of time, on the spot, you have to make your entry, but at least you can start monitoring it. Okay, so my preferred entry is like when the green bar, okay, when the green bar almost start to pass the previous red bar top. Okay, like in this case, a lot of people, okay, they learn the traditional bullish engulfing is like they have to wait for the formation to form first. Okay, means that, okay, today's green bar pass and close above yesterday's bar. They have to wait for closing to confirm this one is the bullish engulfing. But for me, you no need to wait for closing. Okay, as long as you see there's a green bar almost past the red bar, the high point, almost past it, or at least equivalent, then you can start monitoring it already. Usually it will break above. Usually. So if you're able to monitor, or you're able to spot it earlier when it's equivalent, okay, when it's almost like equivalent to the yesterday's red bar peak, then you're able to have a better chance. You're able to make a better entry compared to you wait for the closing, then maybe the bullish engulfing already formed, then it's like already shoot out, the price already shoot out a lot. Okay, there's a difference. Okay, so traditionally, it asks us as trader to wait for the closing to confirm the green bar is above the yesterday's peak, close above, is a bullish engulfing. Okay, but for me, if you want to react faster, then as long as it start almost wants to eat above, then you can start monitoring it already. The chance is quite high that it will pass above. Quite high. Okay, so if let's say sometimes we might miss. Okay, you might not be able to spot on the spot when the green bar almost want to pass it. So by the time you see it, it might have already formed this type of pattern, already pass it. It might already pass it. Okay, then how? What should we do? Okay, usually we will wait for retracement. Okay, like what we say in the earlier of the webinar, it's like whenever the PVA happens, it's a PVA thing. It's like whenever the breakouts happens, so if we miss it, then you just wait for retracement. It should retrace with low volume, and it will retrace and still maintain above the breakout zone. Okay, which is the open of the red bar. Okay, which is the open of the red bar. It should retrace and still maintain above it. So if you miss it, by the time you see it, the bullish engulfing already formed. So you just wait for retracement. Okay, but if possible, better for us to start monitoring it, or you start making an entry whenever it almost start to eat above it. Okay, later we will share some of the case study that we use this type of technique. It's like early spotting one. Okay. So the last candlestick is candlestick pattern that I quite like it is the raising tree method. Okay. So basically is the this one raising tree. Okay. It means by right theoretically it means that when a stock it gets pump up one day, then it will retrace 3 day, 4 day, then it will get pumped another day. But now the Bursa law already changed. Earlier is T3, now it's T2 ma. So sometimes you will see that in the bullish market pump one day, then it retraces only 2 days. It retraces only 2 days, then it will start to have another green bar. It will start to have another green bar because of the change of the rules by the Bursa. Earlier is T3, means that the contra player they're able to hold longer. Okay, so if I'm the owner, or I'm the so-called hot money, okay, I want to pump this counter. Once I pump, then those contra player they also join in during the first day. So if during the previous rules they're able to hold longer time, they're able to hold 3 days, 4 days. So I'm going to wash them, I'm going to flush them out. So I have to make it retrace. Okay, retrace with low volume. Okay, like I mentioned, retraces, healthy retracement, PVA, price volume analysis, it should retrace with low volume. Okay, whenever it retraces with low volume, here comes the day part, how many days part. Okay, previously it's like 3 days, sometimes 4 days. Okay, now due to the rules, changes of the rules, so you will see sometimes it's 2 days or 3 days. Okay, 3 days also could be lah, but most of the time it's 2 days during the bullish market. Okay, because they want to roll out. They want to pump, retrace, and pump again, retrace and pump again. So the retracement will be 2 days time. Okay, this one is traditional formation pattern, but you have to apply according to the rules as well. So you can see sometimes the chart pattern it changes. Okay, the retracement is 2 days, sometimes it's 3 days, but now already like getting shorter. So in future, just for example, in future, if let's say the rules start to change, okay, they make it T1, you can maximum hold until T1, for example, then the retracement day will get shorter and shorter. Okay, it is like play around with the rules. Okay, so this is the theoretical part lah. So it means that whenever a stock price pump, they cannot keep on pumping, because if they keep on pumping, the contra player they're able to earn and just exit. Okay, so they want to reduce the chances of people's earning. And the contra player, the bad part is that they're not able to hold because they are not using their own money. It's the contra, it's the contra limit. The limit they are using got the limit of the time. Okay, so they flush it. Okay, that's why you always you will be hearing people saying, oh, how come whenever I sell, then the next day the stock price will go out, something like this, because they don't want the so-called day, as in the hot money or the operator or whoever controls the price, they don't want other people to make money. Okay, so unless you are holding using cash, So you, and also you can bear with the retracement, because sometimes it retrace, it will retrace quite a lot one now. Okay, like in this case, you can see the green bar pump out. Then when the 3 days retracement happens, it might retrace back to the starting point of the green bar. So means that you can see your paper profit gone. That's why you have to have a very strong mind, if you want to wait for the second pump. Okay, that's why we will usually, if the first day pump you miss it, like I mentioned just now, even for this one, it's like if really we miss it, then you just wait for retracement. Like you miss the green bar zone, then you just wait for retracement. Because usually, we call usually, it's not 100%. There's no 100% in stock market one. Okay, what we are doing now, what we are learning now is all about to increase our chances of winning. Okay, so if you miss the first day green bar, you just wait for retracement. Safer, for risk control purpose. Same goes to this. You can see if you miss the first green bar, you can wait for retracement. If you're using contra limit to buy in the top of the first day green bar, then whenever second day, third day, when it retraces, you will feel very scared one, because you are not using your own money. Okay, and also you've got a time limit, and the price drop. Then you will, end out, you might need to cut loss. That's why we will say, to be safe, you just wait for healthy retracement. Okay, so basically we already finished the candlestick pattern part. Candlestick pattern, you can see, is just like one candle, two candle, three candle. This is the pattern. Okay, formation is a big formation. It consists of a range, okay, a period of time of the candlestick. It forms the formation, like this. Okay, this is a big picture, cup and handle. I believe most of the people, they learn before also, but whether we know how to apply in the practical study. Okay, so the cup and handle, okay, C and H. Basically this one, very simple. Sometimes you no need to remember the name one. Some of the people, okay, they call it cup and handle, but sometimes the handle is not one handle. It might have two candles, three candles, so it will become VCP. So it got a lot of names. Okay, a lot of names. Okay, in the Chinese one, in the Eastern study, they got different names also. Okay, that's why you don't need to remember the names. You just need to know what is the theory behind. Okay, the theory behind is that you can see the resistance line. The resistance line basically is like, just now we already mentioned, there's the supply zone. A lot of people think that the zone, they think that the price is already high, so they want to TP, they want to sell short term, they want to take profit, or they think that maybe fundamental part, they think the valuation is high already. A lot of reason. We don't need to care about the reason. We just need to know the action is that they sell. Okay, they sell during the resistance line. So the net resistance line, the stop price never able to pass above the resistance line. Okay, so you imagine this until one day the buying power, the buying force is able to be stronger than the selling pressure. So one day it breaks above the resistance line. Here comes the new wave. We call it new wave. Okay, new trend, new wave. Okay, so this is the new part of the engine. Okay, so this is the theory of it. This is the logic of it. Okay, the resistance line, once it got broken, it means that, okay, start to show bullish on this counter already. Okay, so basically it's like, you can see when it wants to form the cup and handle formation, it's not like one candlestick, two candlestick, or three candlestick. It might need to have a long period of time, maybe few weeks, few months probably. So it's like a period of time, a range of the candlestick to form a candlestick formation. So formation and pattern is different. Okay. So the second formation that we think is quite practical in the Bursa market is a flat pattern. Okay, you can have many names. Okay, some of it they just treat, some of the people they just treat it as a triangle breakout. You can see the resistance and the support zone. You can see this picture. You can know this is a triangle, and the stop price breaks above the triangle. Okay, it can be triangle breakout. Okay, people can call it a flat breakout. Okay, a lot of different names, but all those names is about breakout. So the breakout, what does it mean? It means that, okay, this is the resistance. You can see the resistance zone. Okay, every time when the stop price hit the resistance zone, it gets rejected. It gets rejected. It retraces. Okay, so until one day, it breaks above the resistance zone. It breaks above the resistance zone. Okay, it means what? Same as what we shared earlier in the PBA. It means that, okay, when it breaks out with the high volume, means that this one is a strong breakout. Why the strong breakout happen? Because just now at first we already studied, okay, selling pressure and also the buying power. So when the breakout happen, because the selling pressure is being, eaten out by the buying power already. So the buying power is strong enough to break above the selling pressure. Okay, this is the part that the breakout happened. So this one, it will form a new wave, Okay, so in Bursa, I think this few pattern is you can use it more commonly. Okay, there's a lot of many other formation, but some of the formation is not easily can be spotted. But all these, flat pattern, all this triangle pattern, all these like cup and handle pattern, you can spot it more frequently in the stock market. Okay, so until here, basically we have already covered everything that we want to cover before we go to case study. So we have already learned the PBA, the price and the volume. So we have already learned the selling pressure and buying power. We have already learned the candlestick pattern, okay, single candlestick, okay, double candlestick, triple candlestick. And also we have learned a few of the formation, okay, the cup and handle formation, okay, the flat formation. So until this moment, if you have already learned something, you comment one. You comment one before we go to the actual case study, so that we know that we are in a smooth pace. Okay. Okay, cool. Okay, I saw a lot of the comment. So we go to the case study. In the case study, basically we will be applying all those strategy, and all those case study that I will be sharing you all is the actual case study that we traded, okay, or we shared. You can see for this is the Go Hub. You can see this one. What is this that we shared in the previous slide? This one is basically is the, you can call it triangle breakout. You can call it flat breakout. Basically, this one is the breakout. Okay, this one is the breakout that we want. You can see there's a red arrow. There's a red arrow down there. So the red arrow zone is the zone that we start to spot for the breakout. Why we able to spot the time? Because you can see the volume is getting higher. Like I mentioned just now in the earlier slide, it's like whenever a successful breakout happens, it should comes with huge volume. You can see the volume is obviously huge than previous zone, previous few day, 1 week zone, the red arrow zone, the one that we draw, the red arrow zone, the volume of it. And also, if you see the black arrow that we pointing at the breakout zone, you can see the formation, the candlestick, it starts to break above the line. You can see the line is the triangle line. You compare this chart, you compare this actual case study with this pattern, you can see it's quite similar. You can see it's quite similar. Okay. Okay. You can see it breaks above the resistance zone. Okay. But earlier, whenever it touches the resistance zone, it got rejected. Means that it retraces. Then until one day, it's about to break above the resistance zone. So this is the zone that we will make our entry. We will make our entry. Okay. So you see after 2 days, it pump again. There's a big bump. Okay. So it pump out in the short period of time, like 1 week time, the upside is 50% upside. But honestly speaking, we wouldn't able to sell at the highest one. For us, we always sell whenever we we feel that this is satisfied. For example, if you are buying at that zone, then you feel like, okay, you want to earn 15%, for example, or you want to earn 10%, 20%. You have to set your own trading plan first before you started to go into that trade. Okay, so usually what we will suggest is that sell in the batches. You sell in batches. Whenever the stock price they start to pump out, you sell in batches. Okay, why are we selling in batches? Because if you sell in batches, if the stock price retrace, you have already sold some in a high point. Then the balance, you set a trading stop. Means that when it breaks below a certain point, then you sell all, then you pay all the profit. But at least some of your position, you have already sold at a higher price. Okay, if let's say once you sold, then the counter continue to get pumped, continue to go higher. It's okay because you still got position left with you. You can continue to sell a bit, sell a bit. Okay, that's what we do. Because in stock market, like I mentioned, honestly speaking, there's no 100%. Whenever somebody tell you 100%, he or she is able to um analyze the movement of the stock, this one is very difficult to believe, I would say. So what we can do is that we need to increase our probability of winning by by spotting the breakout, by learning the PBA, okay, by also doing the trading plan, by also buy sell in batches. This is to have a better control of the position. Okay, so second thing, this one is the paragon block. Okay, so this you can see what is this pattern. This pattern is same with the pattern that we shared earlier. Is the cup and handle pattern. Okay, cup and handle pattern. Okay, so you not necessarily you need to draw perfectly. Okay, you no need to know how to draw perfectly. Basically, you know how to spot the resistance, and then you're able to spot the breakout. It will be enough. You can see the yellow zone, yellow horizontal zone. That one is the resistance. Okay, resistance. Very obviously can see that whenever the price hit the resistance, it got rejected. So this is where the surprise comes in. So you imagine this until one day a huge volume breaks out. What does it mean? It means that the day, the timing, okay, it means that the buying power finally it is huge than the selling pressure. That's just what it means. Okay, we no need to know what is the reason behind. For me, like a lot of people they tend to find the reason whenever the stock goes out, whenever the stock goes down, they tend to find the reason. But honestly speaking, you no need to find the reason one because there's too many reasons and you don't know what is the reason whether it's fake or a real one. Okay, it could be the fundamental reason, it could be some of the hot money they want to buy the stock, or this could be the institutional or the EPF, KWSP, they want to add their position to this stock. Okay, it could be this company getting a new contract, they sign a MOU, okay, their QR is very good, a lot of reason. But what we need to think is that when something happens, when the price action, okay, when the price volume and happens, breakout happens, okay, the increase in the price with the increase in volume happens, what we need to do, okay, what we need to do in that moment, this is what we need to consider. Instead of when the stock price breaks out, when the stock price breaks down, we go and ask people around, we go and search for the social media, we go and search for the KLC screener, i3 investor for the reason. It's already too late. Okay, this is a very important mindset. No need to find the reason. Reason always late. Reason always late. Even those substantial shareholder, they buy sell stock, they will need to make announcement, right? But the thing is that the announcement they are allowed to make after 3 days. So if even you want to find the reason, even you see the announcement, this and that, everything is too late already. So you don't need to spend time, waste time on finding reason. I've been seeing a lot of retail investor, retail player, they tend to find the reason. They will ask, hey, why this counter dropped today? Why this counter up today? Okay, but this is not important. What is important is that when the stock price start to move out, whether you catch it or not. And when the stock price start to break down, whether you have already cut loss successfully before it further drop. This is the most important part. Okay, so you can see for this one. Okay, we also don't know what's the reason it goes out. But the thing is that it breaks out with volume. We can see the breaks out part when the last three candle it breaks above the yellow zone with increased volume. Okay, a successful breakout usually it will be with increased volume as we mentioned earlier. Okay, so let's see. This one's another one. You can see once it's get pumped, then it retraces few days. Then it will support at the zone. If it's not able to support the zone, then cannot already. Okay. So it support the zone, then you buy on the zone, then in a short period of time, you're able to earn, few percent. It's quite efficient now, we will call it, because you earn in a few days time, quite some earnings. Okay. It's not about holding. Okay, it's not about like holding, like fundamentally you want to hold the technology stock. But if you only see the fundamental part of the technology stock, okay, you might think that okay, I mean, as in this one is not a technology stock, but I'm just linking to the technology stock. Like a lot of technology stock, it start dropping already. It already start to change the trend. But a lot of people they still tend to hold it. Okay, so if we able to apply technical analysis, you're able to find what is the support, what is the resistance, whether there's a good chance in a short period of time. Okay, like for this, we traded this for a short period of time, then we're able to earn few percent, quite, like at least 8%, 10%. It's quite a good earnings already, quite a good earnings already. And this one actually can play a few times because the time like 1 week back, every time in intraday, it will shoot down few bits and it will eat out few bits. So if you queue low, then you sell high, then every time you're able to earn some. But this one is last week thing. So we are just trying to share with you all what we usually do. You can do intra, you can do like short period of time trading, like 3 to 4 days trading. As long as you're able to find the formation. It shoot up, it retraces. When it retraces, then your risk will be lower. That's why we said if you miss the pump out, that time you miss it, then you just consider re-entry during the retracement. Then even if it goes wrong, then your risk will be lower also. Okay. Then this one is the bank. The IHB bank we have been sharing since very long ago, but the breakout happens recently. Okay, you can see this another formation of the cut and handle. Okay, basically you can see like even for those big counters, like those big cap counter, like the bank counter, the technical analysis they still apply. Just that people they don't want to buy on the mother stock. Okay, if you are a trader, sometimes they see the breakout happen, then they go and buy the warrant. Okay, but this one is another topic. This one is a higher risk, higher return topic. That's why all the case study we share today is the actual case study, but we share on the mother stock. We share on the mother underlying. Okay, you can see the IHB bank. Even bank, let's say if you've been holding this counter for a period of time, okay, until recently only it start to break out. But the breakout that time actually you're able to spot it one. You're able to spot it one. Okay, so even though for this type of big counter in a short period of time, it also been pulled out 10% over. Okay, so this one also, because you can see the resistance zone is clearly seen is the yellow color zone. Okay, so until one day you imagine this, until one day, like we mentioned just now, the selling pressure is cannot eaten. It is eaten out by the buying power successfully just that day. It means that okay, it finally breaks out. Just simple as that. You don't need to know what's the reason. Like this one, every day the EPF is controlling the price because EPF holdings 40%. Every day you can see EPF, KWSP, got an announcement of buying, selling, buying, selling, buying, selling. So you no need to care whether anything is happening. You just know, oh, this one is breakout. So since that time, all those financial sectors, financial counters, those bank counter already start to move out stronger because all other sectors is getting weaker. Okay, only the bank counter sustains that time. Okay, so this is one of the case. You can see that even technical analysis can be applied on those big cap counter. Okay, and this one is the BTC. You can see that the yellow color zone, the first yellow color zone, the one you can see basically this is the one that we mentioned, like is a type of bullish engulfing, but it's not like passing the previous peak yet. This is the point that we like it. Okay, actually in the formation, this is called another formation. This is not called bullish engulfing. Okay, um, in the Eastern, uh, even this green zone, the first green color candle, even is a doji, it has another name. It has another name of the formation. It means that, okay, I can share more. It means that, okay, you imagine this, first 2 days it retraces. So the third day, whether it's doji, whether it's green candle, whether it pass the second day peak, pass or not is no matters. But whether it's doji or green candlestick, it means that the selling pressure already getting weaker. Even though it's doji, because doji, it means that, okay, there's no direction. Means that the buy and the sell, the power is balanced. Okay, it means that from the first 2 days is the seller more until the third day, the buyer and seller become same volume, same we can call like same neutral already. So even it's like green color zone, green color is in the green candlestick, whether it pass or not the second day peak, it also means that the buyer has already become more already. Okay, so you can, in fact, like I mentioned, there's a lot of candlestick patterns. Every candlestick pattern has a name, but what we need to do is that we know the reasoning behind can already. So for us, it means that, okay, the buyer getting more, just as simple as that, the buying getting more. Okay, if you want to really learn, you want to really memorize every names, we were gone crazy one, because if the third day is a doji, it has another name. If the third day is this the green candlestick, but below the red zone, below the second day red zone, it has another name. If it's above the yesterday peak, is the bullish engulfing. So every time it has a different name, but we no need to care, like I mentioned, because too many already. We have been learning so many candlestick patterns. But the most important thing is that you have to know what is the name, what is the reasoning behind. It means that for the first 2 days, the seller is more, until the third day, the seller getting lesser, the buyer getting more. That's why it start to have the green candlestick. Okay, so I don't want to go deep into different names, not to confuse all of us. Okay, because we have been learning, like I mentioned, there's a book 300 formation. So there's too many. No need to learn this much. You just need to learn a few that is able to apply in the Bursa can already. So you can see this one. This one, basically, what we spot, where we spotted is when the third day, the first green candlestick is the day that we spotted. Okay, so you can see the after that, the next 2 days it pumped out 60%. But like I mentioned, I also not able to sell in the highest. Okay, I can share honestly. Okay, it's like whenever we feel enough, then you can slowly selling. I think we sold around 50 cents. Also good enough already. Okay, it shoot up to 60 over cent. Okay, so like you buy 40 cents, 40 over cent, then it shoot up to 50 cents. You're able to earn quite a good profit. Okay, then if let's say you can see the first green candlestick is the candlestick that I mentioned just now when we are sharing the bullish engulfing slide. Okay, this is where it haven't passed the peak of the red zone, the peak of the yesterday red candlestick zone, but it has already indicated something. Okay, this is where we can pre-entry, like I mentioned also pre-entry. If let's say you wait for the bullish engulfing to happen, it has already eaten out a lot of the previous rate peak. Okay, it has already passed the previous rate peak a lot. So your entry will be higher, your risk will be higher. So you might need to wait for retracement only. But if you pre-entry at this zone, okay, you spot the first 2 days start dropping, the third day is the first day green. Means that the third day is the day where the buyer successfully more than the seller. That's the first signal that you can monitor. You can at least make some position. Buy, like we mentioned just now, you buy and sell in batches. So you can at least test some. You don't need to buy all one, you test some position. You buy a bit, you test some of the position. Okay. So this is all the things that we really traded. So what is the case study that we shared just now is all the things that we really apply and really traded. So basically it's like all the sharing, all the knowledge, all the learning sessions. We select all those we feel basically more useful one to share to all of us. Okay. So here's the end of the case study. Then I will go to the Bursa simulator to share to you all how we all as a trader we every day monitor the market. What is the thing that we will be seeing? Okay. So if you okay, you comment a 2 for me. Then I will go to the actual monitoring part, like the live monitoring part to show to you all. Okay. Let me end my slide first. Oh, okay. Okay, I see a lot of tool. Okay, cool. Let me you can see. So first of all, you search Bursa Academy. Actually, Bursa provides quite a good simulator. So you can click this one, simulator. Then you click equity simulator. Okay, all can see. Okay. So this one is the end-to-end. Okay. You can see basically the Bursa Academy that provides this simulator is basically 100 okay, well I can say 100% similar to the actual trading platform one. Okay, just that the actual trading platform, the market depth. Okay, you can see the down part of here, this part, the market depth part. Okay, so in the actual one, you might see 5 depths. You might see 5 depths. Okay. You can apply through your broker. You can ask them to give you free access to 5 depths. Okay. But in this case, the Bursa Academy one, it show three market depths, but already enough already. This one's the most basic one. Okay. So what we will see every day is that we will be seeing the volume. Okay, volume. And I like another thing is the value. Okay, like today value actually considered soft also lah. Means that the market is not active. Because the traded value also not much. Volume is one thing. Volume is the thing that a lot of people they will be talking about. They say, okay, like okay, today Bursa active or not? Okay, the trader volume, how much? Okay. But I will also see the trader value. Because sometimes if the volume is a lot, but the value is little, it means that it might be the case that only the penny stock is get traded. Okay. But recently there's no this case lah. Okay, but back in few years time, like all the sector already be rotated. Like probably oil and gas pump out, plantation pump out, okay, then technology pump out, those healthcare pump out. It's like every sector they also rotate one time already until nothing to play. Okay, nothing to play already. So they will play those penny stock, those hot money, nothing to play already. So they will play those penny stock. Okay, penny stock is like only few cents, few cents. So that time you might see the trader value is a lot. Sorry, trader volume is a lot, but the trader value is just little. It means that only the penny stock is active. So that type of market basically nothing to play, nothing to trade. Okay, but currently it's not the case. Okay, currently it's like every overall the market is getting soft a bit, not even the penny one. Okay, it's like penny one also not being pumped. Okay, so like in current stage, you can see those active one is those like heavily drop one. Like earlier, like the Genetic, now it's the G-Tronic. Like if 2 weeks back is the CEB, okay, cap EMS per heart. So basically it's like those active one, you can see from here. We will be seeing the top volume list also. You can see other than those index warrant, okay, the structural warrants start with the HSI something one, you know, all these no need to see because this one is the another thing, another topic. Okay, if you see the individual counter, we call it individual counter, right? You can see the first one is G-Tronic. Okay, the most active one is the G-Tronic. Okay, so let's say the G-Tronic, right? If you see the day chart, it's obviously downtrend stock already, but it's still the top volume because nothing else to pay. So all those are heavily drop counter home trader as in those like self trader, okay, not employed under any bank one. Those self trader they will be seeing, and also the PDT, IVT, the bank trader will be seeing this type of stock. Okay, like the previously CEB also, even though the day chart is obviously downtrend already, so people still seeing it. Okay, because nothing else to see, and this type of the downtrend counter, sharp drop counter, right? Whenever it rebounds, it provide the room for trading. Okay, so recently me and my IB investment bank traders friend, so we have been discussing for the current market also lah. So they also like earlier Notion, I think 1 week back the Notion also it rebounded. It sharp drop and it rebounded. Although the day chart is not good, but those bank traders they have nothing else to play. So they have to see this type of counter. Okay, because this is their work. But for us, let's say if you are retail trader, investment is just your side income, your side business. Okay, you not necessarily you need to buy those downtrend counter one. Okay, you can just skip it because it's too dangerous. Okay, but for those investment bank player, those PDT, IVT, because they need active counter. That's why even some of the counter high risk, like this type of sharp drop counter, G-Tronic, CEB, Genetic, Notion, all these things, they still want to play. They still need to play. It's not one, it's they still need to play. Because like I mentioned in the slide just now, maybe sharing about the slide, it's like in the current market, buyer is being dried up already. So not much counter has the buyer one. So you can see some of the stock, right? You can see the queue. The queue is we call it very thin queue. Not much buying queue in there. So if all those sharp drop counter, right, is being actively traded, so all those investment bank trader, IBT, PDT, even home trader, okay, they will all be inside the counter. Okay, but if you want to avoid the risk, you can just skip it because the day chart is already downtrend. Okay, you only play for rebound. It's not for reversal of the trend. It's just for rebound. Okay, short-term rebound. Okay, so we will be seeing the volume value, and also we will be seeing the gainer and the loser. Okay, the up and down counters, the gainer and the loser. Okay, so sometimes in the earlier session you can already feel market is not active, that one is based on experience. Like we able to sense today there's no much active counters. Those active one is just repeatedly the same one. Probably you can see G-Tronic, Hawk, Okay, VTC, all these things. And you can see all this VTC also we covered in the case study earlier. So this stock since 1 week, 2 weeks back is already active counter until today. Means that there is no much new active counter in the market. Okay, as simple as that. Or else you can see the list, the top volume list are basically it should change one. It should change like every 3 days at least. Okay, new counter need to come in, then the old counter it should retrace a bit and the volume is getting lower and it should out of the list kind of thing. Okay, but now it's like not much active counter lah. Okay, so we will also see if let's say if we want to really want to buy something, we see also the market depth. Okay, this one is only the 3 depths. Okay, like I mentioned just now, you can apply to your broker for free access of 5 depths. And if you are active trader, or if you are able to pay, then you can able to get access of 10 depths. 10 depths okay. 10 depths you're able to see more, because sometimes those hot money people, hot money or operator, they know that a lot of people they only able to see 3 depths or 5 depths. That's why they kind of like beautify the queue to make it only five depths. So if you're able to access to 10 depths, you can see more things. You can see after the first 5 depths, then the queue after the next 5 depths is already thin. Means that the first 5 depths is being beautified by people already. Okay, so this like something else to say lah. Okay. Then also if you confirm want to buy something, then we also will assess also the times and sales, the business done, these 2 things. The business done is that we want to see how the buy sell is being done earlier. Okay, like certain range. Okay, like for example, in this case, you can see basically it's all throw down, because it get matched on the buy volume. Okay, you can see like for example, 45 cents, 44.5 cents, 44 cents, 43.5 cents. You can see all these things all these prices there is no much buyout. There's no much buyout. So in this case, we can know that today this counter is being thrown down. Okay, people throw down this counter more compared to people eat out the counter. So we will assess all these things, but all this is the little things. We as the full time we will assess. But this just as the extra info to share to you all, because if you are not a full-time player, all these things is not as important. Just that we share also for extra knowledge purpose lah. In the times and sales, like this one is the current one, the buy sell, buy sell, buy sell. Okay, but we will assess the business done more lah. Okay, like actually, if we see here, then you know lor. It's like this counter being thrown down. So this one is the VTC. Okay, go back to the VTC. It's just now the case that we shared just now. You can see if you tend to be a holder, you will lose out in Bursa one, because like this counter, it goes back to now it's 41.5 cents. It goes back to where we started, where our first entry was. Means that if I hold for 1 week time, 2 weeks time, I didn't sell, I gain nothing. Okay, so in Bursa is like, you buy when the stock price is about to go out, the breakout happen that time. You buy, then when it shoot out, then you sell. We call it sell and out. Sell and out means that the price go up, then you sell. Slowly sell. TP, like this. Then if it retraces, then you want to buy again, you can buy again. Buy again, you set a support. Then when it breaks, then you sell again. If we go out, then okay, you sell again as well. If you tend to be a holder, you will lose out a lot. You go out, you didn't sell, it goes back down. And when it goes back down, people won't sell one, because they feel like I used to earn this much, but I never sell. Now only earn few bits only, or now just like no gain, no loss. I don't want to sell. Then end up they become lost. Okay, so it's like quite rugi, quite rugi. Okay, so in Bursa, it's like you set a range first. You set a trading plan first. Then you just trade according to a trading plan, or else you will lose out a lot. Like those sharp drop counter. Actually, people say, oh, like Genetec, CEB, Gtronic, they say they don't have chance to exit. Actually, it's wrong one. It's not that they don't have chance to exit, it's they don't want exit. I can tell on the one because it's not like one day sharp drop a lot. It's like before recent few days sharp drop. Since earlier it already start dropping. Like the CEB also. It's not like one day it dropped from like 1 ringgit to like 70 cents. It's like earlier when 1 ringgit over, it start dropping to the 90 cents. It already a signal 10% risk already. But just that people they don't want to sell. So end up they lose a lot. Then they say, oh, now I'm already losing 50%, so I don't want to sell. It's not like this trading because in the current market, it's too volatile already. It's like no buyer. So you have to protect your own capital. I have been seeing a lot of people recently saying that market is very bad. In fact, it's very bad. Just that when it's bad, you don't need to do more trades. You can be more conservative. You can buy smaller, buy lesser. Okay, it's like earlier 10 chance, you will buy 5 chance. Now 10 chances, you just buy 2 chances. And earlier, each counter you will buy 50K, for example. Now we just buy 20K. Just for example only. So if you really want to buy, you control everything because the market is soft. It's not like wow, now still need to go all in, still need to go big. Once it start dropping, you will have different mindset already. You will be afraid. Then you might make wrong decision. Okay. So the last thing I want to share is the off-market list. Off-market is the thing that we will see also like every day. I will see every lunch hour, and I will see every closing. Okay, closing the time. So the off-market is the DBT, is the direct business transaction. It means that what is the off-market transaction being done today. Okay, so basically if you monitor this, most of the time you will be able to see some of the transaction you will see first before it's getting announced by the official announcement. Okay, so but this one is also not that important if you're not a full-time player. Just that we share what we will see only. Okay, so hope that you're all able to learn something on the platform. Like this is what we as a full-time we will see every day. Okay, so basically we re-emphasize again. We will be seeing the volume, value, loser, gainer, top volume list, the counter. Also, we will be seeing the off market. So if we going to buy certain stock, we will be seeing the market depth. We will be seeing the transaction business done. Okay, that's all. So we got the final 10 minutes. So if you got any question, you can ask in the Q&A section, sir. Okay. Also, I hope that you all able to learn something today. Let me see what is the Q&A. Okay. Okay, the first question is how do I adjust the candlestick trading approach based on different market conditions, trending market versus ranging markets? Okay, basically it's like we will be more conservative. Like I would say, like even for example, even hammer happens. If hammer happens, in the uptrend counter retracement, hammer happens, you can buy and you can hold because it's the uptrend counter. But for now, hammer happens when downtrend counter. Downtrend counter, then it rebound. So all this type of the formation happens in the downtrend one. We wouldn't hold much. We just do a short trade, then we will just exit. And sometimes we not even want to take a chance because the overall market is too bad already. So we have to see the market sentiment first. Okay. So the second question is like accuracy of candlestick and indicators. Many times when we follow the analyst trading idea on technical charts, we tend to lose money. Can you share? Okay, first of all, I wouldn't follow anybody's trading idea. You don't follow. because if you follow, you don't know what is the reasoning behind. You just follow, you are just a follower. You are not an analyst. You are not a creator. You don't have your own thinking in this case. So if the stock price starts to betrays or how, then you will feel afraid. So first of all, you don't follow other people. You no need to even follow me. Like today, I just share concept. I just share knowledge. I just share the ideas, technical analysis knowledge. Okay, there's no buy sell call. So you don't need to follow analyst trading idea one. You have to build your own system. The system as in your trading system. Like I mentioned just now. Okay, my system is that okay, I know what is the most commonly useful formation patterns in Bursa. So whether I will take chance every time when the pattern happens, no, I will also see the market condition. So overall, it's not like the chances is not good or the accuracy is not good. It's about we ourselves, we have to learn something first. Then, like I mentioned, like the hammer case, when the hammer or the come and handle case. So if let's say we learn first part only, or come and handle happen, then we buy or break out. But the second part we never learn. The second part is that if it fails to break out, if it drop back below the support zone, okay, then we have to cut loss. But people they tend to think that okay, when the come and handle happen, then 100% it will go out, so they buy. Then when it drops, then people say, oh, this come and handle cannot use one. It's not useful. It's not like this because in market there's no 100%. What we do, like what we are learning today, also we are just increasing our chance of winning. Okay, we know when come and handle happens, better chance it will go out, better chance it will break out, better chance only, no 100%. If it drop below, then we cut off. This is the case. So the accuracy is okay. The winning chance is okay. There's not 100%. You can get like 60%, 50 to 70% is already enough. Second thing is that you just need to increase your risk and reward ratio. So it's no 100% one. We don't listen to others. We build our own system first. Okay. So the third question is like, usually when the breakout happens, how long does it last? Okay, you have to identify whether this is a solid breakout or there's a fake breakout. If the breakout is solid one, or it is above the breakout zone, basically it will last longer. Like we mentioned, this one is a new wave. New wave means that as long as the stock price maintain above the breakout zone, it's a new wave. The second thing what you need to do is that like us, we will be seeing the indicator, we will be seeing the moving average. Okay, as long as the stock price trend above the moving average after the breakout zone, means that it slowly it trend above, it trends out, slowly it trends out, then it's a healthy one. It's a healthy one. Okay. So let's see, we got another 5 minutes. Okay, so how do we know at the moment it breaks is a false breakout, how to manage that? Okay, honestly speaking, we wouldn't know. We wouldn't know. What we need to do is that you monitor whether it will goes back below the breakout zone. Okay, sometimes like there's a case, I think KJTS, but it's long case already. Okay. Okay, it happens on June 14, the KJTS. Okay, that time it breaks out, but the second day it drops below the breakout zone. So this one is a false breakout, but during the breakout that time, we wouldn't know whether it's a fake breakout one. We also think it's a solid breakout. We also bought. Okay, but in the end it drops below the breakout zone. So we have to cut loss. We have to cut loss. So if you are asking whether we know during the time of breakout, we wouldn't know, honestly speaking. Okay. Unless it drops below. Okay. So this is what we need to do. We have to control the risk. There's no 100%. Okay. What if it did not retrace? Where do we enter? Usually, if it really keep on shooting up, like keep on flying every day, 10% like 8 to 10%, then basically for the first pump, you can just skip it. You can just skip it. Okay, you can go to see the Go Hub. Let me share. I think I share the chart better so that you're able to know more. But we have little time. I hope I can answer as many questions as possible. Okay, you can see this is the trading view. Okay, so okay, just now back to the case is this one, the fake breakout for the KJTS. Just like I mentioned, this one we also cut loss. We also cut loss. Okay, so that's why we say there's no 100%, but we need to control the risk. Okay, then second thing just now you mentioned about, okay, if you miss, let's say if this one, let's say this part actually if you miss then you just wait until the second formation is formed more. Wait until the second formation is formed more. Like for example, if you already miss this part, this whole part you miss already, then you have to wait until the second formation is formed more. Oh, recently also formed another one, here. Okay, here also formed another one. This bar, but I also didn't trade because the market is the time I think I traded the BTC, so I didn't trade this one. But that time also another formation. So it means that if you miss something, you just wait until the second formation is formed. Okay, I hope I answer your question. Because if it keep flying, you didn't have any good chance, you just skip it. But if it just started, let's say when the time here, when it just started so you buy something first, you buy some batches first, you buy one batch first. So if it continue, one day it go out already, no stop, then no choice. Then you at least you profit based on your partial portion. Okay, if it go up, then it go down a bit, then you're able to match your second portion, also good. Okay, so if really you didn't able to match any of the portion, then you have to wait for second formation, like this, wait for second formation, because a lot of formation, then got like this go up got 3 times. Okay, but me personally, I traded this part only. Okay, because like that time here also we got other stock to see, the BTC. So we have to miss. Okay, I hope I answer your question. Let me see. If more than 100%, is it advisable to sell? G-Tronic bought RM2 what? A little bit difficult, because let's see, okay, G-Tronic, my last trade was here. Okay, why? Because I break out. Okay, so you're able to earn this part. But I also didn't sell at the highest, like I mentioned, we weren't able to sell at the highest one. Okay, so in this case, like because you bought 2 ringgit, it's very high, 2 ringgit, 2 ringgit is very, very high, It means that you bought many years back, 2 ringgit is very high. So in our session, we weren't able to give any buy sell advice, but what we can share is that every time we all buy a store, we should do our trading plan. Trading plan. So like in this case, if I buy here, what is the reason I buy? Because it breaks out, So if it drop below, then I have to exit. So same goes to any other trades. If let's say you buy this one I mentioned, you buy 2 ringgit. Wow, it's this zone already. So let's say if you buy here, if the stop price already break here, this part, then you should leave already. But maybe you are a fundamental player. So fundamental player, that's why, like we mentioned, you have to combine FA with TA, or else it will be big hurt. And actually you still have something left. If let's say you say 2 ringgit, because there is no case that you can lose 100% one, like you lose 70%, you still got 30% left. Okay, because if you lose 100% means that it got delisted already. Okay, so in this case, better you need to support at the current zone, like at least 50 cent. We call it the 50 cent is the strong psychological support. At least you need to support at the zone, and at least get sideways like the CDB. Okay, it start dropping, then it is like stable above the 30-cent zone. At least this is something we want to see lah, or else those who hold at a high price will be very, very difficult. Okay, so I think I answered another 2, 3 questions because our time is out. Okay, normally buy sell by how many batches? At least more than 2. For my case, I think average 3 batches for counter, unless the market is very bad and I'm not trading how to say, I'm not trading really actively. So maybe I just buy 1 or 2 batch, that's enough already. Like I buy certain stock maybe just to test the market movement. Then I buy 1 batch, although it could be the case. Like when the market is very, very soft. So I just don't want to put in much capital at the time. I buy 1 batch. But overall, if we really want to buy the time one, you buy 6 digit and above, then you have to separate few batches better. I will separate 3 batches, I think, on average. Okay, another question, let's see. Is current good timing to buy local oversold technology stock with small portion? If you are a long term holder, you think that no matter how Malaysia cannot skip away from the technology, then you want to start buying a bit, can also. But the thing is that you're not sure when is the stop of the downside. Because you think this is the good timing to buy, but it might drop further. Then if you're not able to hold, then you might hurt. So you don't if you really want to buy, you don't buy much. You really need to separate a few batch, quite a few batch. And the one is not TA already, or the one is FA already, or because TA you wouldn't want to bottom catch at this moment because the market is too soft already. Okay, excuse me, but I can show you the technology chart, technology sector chart. You can see if it reaches this zone, at least is support lah. This zone it has to be supported, or else it will continue to go down to second or third zone. This zone and this zone. Okay. So this zone it at least need to be supported. Then better lor. Because this zone is it has already been tested a few times already. So still quite valid support lah. Still quite a chance to be supported. So if you really want to buy, you have to think first, what is your strategy? Like I mentioned just now, you have to have your trading plan. Like if you buy certain stock, okay, it dropped until certain point. What point, then you want to buy the second batch? What point you want to do exit? What point it rebounded, then you want to exit? You have to think all these things first before we really enter into it. Okay. But the technology chart, if you buy technology stock, you basically you monitor the technology sector chart first. Okay. So the last question. Is it safe to buy 200 MA? Actually, 200 MA, some of the people they treat it like in Chinese, they call it like the life line, the line of the life meaning it is a very important MA. If it drops below the MA, then it's basically it's not good already. Okay, but for me, actually I didn't see 200 MA one because for me it's too slow. Imagine one day a stock it keeps dropping, you never sell for example until it breaks the 200 MA only you sell. Trust me, it will be too late. Confirm one, too late already because you wait until that time you sell too late. But if you are asking whether if let's say you don't have any stock on hand at high price you are just want to bottom cash or what, so you are asking whether it drops to the 200 MA line, whether you want to buy or not, you can. But for me, no matter how, I will also combine with the candlestick formation one. I will see candlestick formation, I will see MA, but my MA is not the 200 MA. I will see MA 20, MA 10, MA 5, maximum MA 60. Okay, because if we see MA 200 a little bit too slow, but MA 200 in fact is a strong support. It's a strong support. But me personally, that one is not my strategy so I cannot advise. Me personally, I didn't buy on 200 MA. But I can share that in theory, MA200 is a strong support. And also MA240. Okay, so some people they use 200, some people they use 240. Okay, because 240 is 1 year line. Okay, so I hope I answered the question. Okay, so time's out. I hope you all enjoyed the session. If you learn something, you comment a 3 for me. If you learn something, you comment a 3 for me. Then I thank you very much for the time. And okay, I pass back to Carmen. Thank you. Thank you.
Okay, so thank you, YC, for such a wonderful sharing. Okay, so we do hope that everyone here did get something out of the session today. And yes, of course, before we end, just want to do a little bit of sharing on this Bursa Academy. For those who are not aware, Bursa Academy is a comprehensive one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. So if you're interested, you can head over to www.bursaacademy.bursamarketplace.com, or you can scan the QR code to be directed to the page, right? And yes, for our next webinar, the topic will be 3 steps to own your golden goose in investment, which will be held next Wednesday, 18 September from 8:30 p.m. to 10 p.m. So if you're interested, you can click on the link in the chat box that I shared earlier to register. Okay, and of course, with that being said, one last thing for those who are interested, you can fill in this form so that we'll try our best to with your preferred broker. Yeah. Okay. And with that being said, thank you once again. Thank you so much, YC, for your sharing, and thank you so much, everyone, for attending this session. And we hope to see you in our next session. Thank you, everyone, and bye.
Thank you.